Hi, you're welcome to another episode of Across Markets by Business 360. My name is Joy Abia, and with me, always, I have.
Vera Ifechuku, your co-host right here on this show.
All right. Thank you so much, Vera. How are you?
I'm good.
How was your week?
My week was amazing.
And how are you recovering?
Yeah, I'm feeling better. You guys, I had food poisoning.
Oh my God.
Yes, and it's not a very good experience at all. Okay. So please be intentional and mindful of what you eat and what you give your body. Because it's not funny.
Mindful. She knew what she ate, and she ate 5 of it.
So, but
anyway,
grateful to God, I'm back and I'm okay.
All right. I mean, I'm just coming back from like a very sweet leave. I feel refreshed. God is good. Anyway, so we're starting with the show with, we're giving, 3 major stories, or rather 3 major insights today. Right. So the first, I'll be opening with this. The CBN just held its rates at 26.5%. The same day, 31 companies won oil block licenses, expected to add 300,000 barrels per day. And buried beneath both headlines is a number that explains why Africa's clean energy future keeps getting delayed. A cost of capital that is 3 times higher than what investors would pay in Europe. These are 3 stories, 1 thread. Now, let's get into it. So, for the economic pulse, of course, the most important numbers, the CBN just had its 306th Monetary Policy Committee meeting. Okay, so it's obviously they have held the rates still at 26.5% for the longest time now, since about February. And there are debates on why we're still holding the rate at that, why we're still keeping it at, why the CBN is still choosing to keep it at that rate. So here are like some core statistics that come alongside this information. So the monetary policy rate obviously has stayed unchanged at 26.5%. We have the cash reserve requirements, which is 45% deposit money banks. For the deposit money banks is at 45%, and for merchant banks is 16%. And then headline inflation as at June 2026 was 15. It's dropped, it dropped from about 15.93% to 15.91%, that was in May, and then now in June. But however, on the contradicting end, food inflation accelerated to 17.52% from 16.96%. Now, that's a very uncomfortable detail. I mean, why is the headline inflation dropping and then we're still having food inflation rising? Anyway, the core inflation has eased to 15.92% from 16.82%, and that's probably that's from the beginning of the year. The external reserve increased, right, from I think it was basically less than $52.52 million, that is what it is now as of July 17th. So 11 months import cover and a 17-year high. So real GDP for Q1 2026 grew by 3.89%. So basically, Governor Yemi Cardoso says, basically his points he explained, or he pointed us to the fact that there are renewed Middle East tensions, persistent food inflation, and the need to lock in price stability gains. So the committee wants more data moving forward. So basically, the reason why they have still held this rate, according to the governor of the Central Bank of Nigeria, he says is still keeping it stable because they do not want to mess with the gains that we've already had so far in the year. So that's his reason, or that's the committee's reason for still holding at such rates, not to mess with the gains that we have so far reached this year. So Vera, so what are your thoughts, questions? What are we thinking about this inflation issue and the monetary policy rate?
All right, so what I see here is that typically and basically, when in terms of, businessmen, investors, and those that loan from the bank, as much as this rate remains the same, there's a possibility and a chance that when the rate comes down, if peradventure they bring the rate down, investors, businessmen, and even we the consumers, right, we're going to spend less, right, and we're going to borrow less. But if it increases, definitely our borrow level is going to be increased, both for investors, both for consumers, and both for businessmen, and and all. But there's a question that I'm meaning to ask here, because if the food inflation keeps going up and headline inflation keeps going down or went down, right? How does that even happen, right? And what does it significantly mean for we ordinary Nigerians, for layman? Because an average Nigerian out there would not understand these things. Only those into those that have great knowledge of the numbers and statistics, and even some businessmen and investors, just a few people would actually tend to understand this. But for an average Nigerian out there who is struggling and having day-to-day activities, they would not understand this, and would not understand this, right? And we all know, not just me, Joy, myself, and even you that you're watching, you spend most of your income on food. So imagine having food inflation going higher while the headline inflation remains the same or goes down. It's a thing to worry about, and we need to look deeper on this and actually get to know what's actually happening. And it's our major concern. It's all of our concern. So we need to put our heads together to get to know what's actually going on right behind the scenes.
Okay. I mean, personally, to answer, for my own financial statement, most of my income doesn't go to food anyway. So I don't.
So where do they go to?
The highest. I don't want to.
You don't want to explain yourself.
I don't expose myself here, but I do. But the general household spending. If you talk about the household, because I'm not living alone.
Yes.
So yes, food, food is definitely the most essential. And, in a household like mine, we don't used to play with food. So,
exactly.
Quality food must come first.
Yeah.
But most of Nigerians do, let's just say on a higher, in terms of statistics, and on the average man obviously needs to get fed, and anyway. So but let's just say someone who earns at least let's say 70k, which is should be the minimum wage rate. That person can at least if you're 70k, food can take almost 50 for that month, actually. So it's actually alarming. But however, two things are true simultaneously. Core inflation is falling and the exchange rate is stable. So the reforms are actually working on that front. I was just talking about it with one of my friends the other day. She's in the UK. And then we were just ranting about how, Nigeria has just gotten bad since she was there. People are just complaining because there's social media, and a lot of people are most of the trend, or the most viral content you see about Nigeria is maybe some people are actually mostly complaining about what's going wrong in the economy, or And, while we're just talking about that, which is true, most of it is true, I just brought her attention to the fact that, especially working on this show has given me the light of statistics that actually amongst the top performing economies in the world, Nigeria has actually come as part of the fastest growing so far, especially this year. And the central bank actually won the Central Bank of the Year this year. Based on our central bank won Central Bank of the Year award.
Wow.
Now, if you look at the statistics, we've actually like based on like inflation falling now we just discussed
Exchange rate.
the exchange rate, is more stable. Foreign reserves has like, increased, and all of those things. So those are indicators. Those numbers alone are indicators to the global economy or the global landscape that we are actually doing well. However, food inflation is rising because supply chains in food producing areas are still disrupted and transportation costs are elevated. So the CBN cannot fix roads and insecurity with interest rates. That is the truth. We still have the CBN is what's it called now? Responsible for regulating what they can, the numbers, the money supply, and all of that. But the government still has their role to play.
Yeah.
Other key players, other key what's it called now, ministers and leaders in certain other sectors have their roles to play. For roads, transportation, how can we reduce the cost of transportation for businesses, so that, because transportation is what's part of the things that make food expensive. Exactly. So production, insecurity too.
Oh my
so
gosh,
that's the fiscal side of this problem. So I mean, the new Nigerian official overnight rate, replacing judgment-based interbank benchmarks, is a quiet but important reform. So it aligns Nigeria with global post LIBOR practice and builds the infrastructure for a future inflation targeting regime. So we're going to watch this closely. All right. So on the sector signal, another thing we picked up, or rather, let's just say from our research this morning, is there were 31 winners that emerged from the 2025 licensing round by the, NUPRC, Nigeria Upstream Petroleum Regulatory Commission. 300 expressions of interest at launch, so 143 qualified companies, 200 technical and commercial bids submitted. So, however, at the end of the day, the government's 2030 target is 3 million barrels per day, and our current production is approximately 1.5 million barrels per day as of Q1 2026. So the signature bonuses is about 3 million to 7 million per block. So we have some key winners, that's won as part of like this licensing round. We have Asharami, Lex Oil, Saratoga, AYM Shafa, Blue Ridge E&P, Star Deep Petroleum. So this round is different from Nigeria's past licensing history in one critical aspect. The Petroleum Industry Act 2021 replaced discretionary allocation with competitive bidding. So the NUPRC, CCE, ASON's message was unambiguous. An award is not a trophy, drill or drop. Winners have 90 days to meet post-award commissions or they forfeit. So this is not the language that Nigeria's upstream sector has historically heard with credibility. Whether it's enforced or the story, whether this is enforced, this is the story to watch. So anyway, do you have any particular comments?
For those that might not really understand what this oil block means, right? So this oil block licensing, what it actually means is that the federal government has given or has approved companies the right to explore and produce oil in Nigeria, right? And this is important because these new licenses could eventually, increase Nigeria's crude oil production, and which is about 300,000 barrels per day, right? And this is important because in as much as there is more oil production in Nigeria, there's going to be successful, exports of and transaction of these foreign products, and of course, foreign exchange rate in the country is going to increase. So more foreign exchange is going to support your, government's revenue. In as much as there's going to be more foreign exchange, it's going to support the government's revenue. It's also going to, add value to the currency, to our naira. Yeah. So this licensing is actually very important, right? And not just Dangote, giving this is also giving opportunity to other companies out there in Nigeria who wants to help in the country's economy and growth as a whole. All right, that being said and that being understood, right, I'll now ask this question. We have 300,000 additional barrels per day, and that sounds significant, right? But Nigeria's 2030's target is 3 million barrel per day, and we're currently at 1.55 million barrel. Is this round closing the gap, or is just beginning to address it?
Okay, I mean, this story just points me to the fact that, Nigeria, we're still not giving up on oil. We should not.
No.
Oil is one of the world's
Nigeria's
most minus Nigeria. Like, obviously, it's has been one of our
biggest source of money,
source of revenue so far in the country. However, the world always would still need oil. We have one of the biggest refineries, Africa's largest refineries here in Nigeria. But the gap between 1.55 million barrels per day and 3 million barrels by 2030, according to
4 years from now,
that's 4 years from now. According to analysts and some comments, they said that's actually like a huge gap. That's an enormous gap. So even if all of these 31 winners that have been awarded these licenses, they drill, which historically is not all of these companies do drill, 300k barrels per day of, if all of them produce all of these 300k barrels per day of additional production over 3 years, is a step. It is not a solution. Okay, so the deeper problem is that Nigeria's existing infrastructure, pipelines, export terminals, and security in the Niger Delta must improve for new production to flow efficiently. So you can license the acreage, but you can't license the pipeline. At the end of the day, the
production is the
exactly
major,
there's you can give more licenses to people to produce and all of that, but then the supply chain, all of things that affect that production itself needs to be dealt with. And insecurity in the Niger Delta, because people are, I feel like there was this other state that had, maybe, I don't know if I'm right or wrong, but I did read it on the news, or it came on the news. There's a state, I think is not popularly known for oil right now in Nigeria, but they just discovered a part of oil. And so all of those things, I think somewhere in Rivers State, some people, there's some parts of the communities that will hold on to a land because you say, oh, this part is oil, maybe it's for us, different disputes within, states because of oil and all of that. I think all of those things need to be sorted. We need to understand that we're doing this for the greater good. Even the countries, the states that are having this oil and actually have those oil plants there and are producing and refining the oil, they need to probably maybe greater incentives given to the people there. More jobs will definitely be created and all of the likes. But essentially, you can, there's work to be done, but well done to the NUPRC. All right, so on our last story, which is following the trend of following the story of oil and energy. So the cost of capital. So I actually read somewhere on LinkedIn that they did a little bit of a breakdown on the cost of capital and why Africa's clean energy is expensive before a single panel is installed. So this is not about renewable energy policy. This is about a structural financial rule that is quietly making Africa's economic transformation the most expensive in the world. So the core problem is that international credit ratings tie the creditworthiness of private energy projects to the sovereign rating of the country they operate in. So of Africa's 54 countries, only Botswana and Mauritius currently hold investment grade sovereign ratings. Only those two. So that means a commercially viable solar project in Nigeria with strong cash flows, a credit-worthy off-taker, bankable contracts is treated nearly as risky as the Nigerian sovereign itself. It isn't, but the rate says it is. The rating says it is. So, I mean, cost of capital, that's the main issue. That's the main topic that we're talking about here. So, the cost of funding, maybe an energy project, especially, maybe this is really why Nigeria was still, struggling with energy supply and actually solving the main energy problems in the country. Anyway, let's get to the numbers. Right. African countries pay an average interest rate of 9 to 10% on average on sovereign bonds, compared to just 4.7% for emerging markets in Asia. The cost of capital for energy projects in African countries is at least 2 to 3 times higher than in advanced companies and China. The weighted average cost of capital, that's WACC, in Africa stands at 15.6%, over 3 times higher than in Western Europe and in the US, where rates range between 2% and 5%. See the issues. Solar projects in Kenya cost 2 to 3 times more to finance than equivalent projects in the United States. Wow. Nigeria's recent Eurobond was oversubscribed by nearly 600%, demonstrating that demand for Nigerian risks exists, but demand at 10% when the project needs 5% to be viable is not the same as affordable capital. This thing is a little laughable, but it's not laughable. To be honest, this is not a funny situation. These numbers are like they're pointing out something very important within Africa. Why is it so expensive to invest in the core, like just the core things that we need? We actually need more insights into why this is. But then, again, so, okay.
All right, so okay.
Oh, sorry.
Okay.
We actually need insights into why this is a problem. But, Vera, what do you like?
Okay.
What are your comments on this?
All right, so let me understand this, right? Nigeria has sunshine, right? And Nigeria has wind. Nigeria has resources to build clean energy, clean energy economy. But because of a rule written in a financial institution in New York and London, now a solar project here costs 3 times more to finance than the same project in Germany. Look at that. And because of that extra cost, right, the project either doesn't happen or it becomes more expensive for the people who need the power. Now, that's the problem.
That's the serious problem.
Nigeria.
Precisely. And here's the irony of, this is the irony of it all, right? As it connects to, obviously, the first 2 segments, which is the CBN that's holding the rate at 26.5% because of because of legitimate reasons in inflation concerns. But that rate also flows into the domestic cost of energy financing. And the new oil blocks we just licensed will generate revenue that could theoretically fund energy infrastructure. But the clean energy transition requires private capitals at scale. And private capital is being priced out by a sovereign ceiling that doesn't reflect project level risk. Now, I would really love I think I'm looking forward to having an energy expert on this show.
Yeah.
Very soon, because this thing of energy and like the cost of financing and all of that, I think we need to know why.
Needs to be broken down,
It needs to be very broken down, not just to people that are in energy and those that understand, probably understand this, but for like the average person to understand, the average consumer, so that they can actually see, in hindsight, like why it's all happening, like why is it so expensive, especially to solve this problem of energy. You can see that it's even, first of all, it's expensive to even finance it, the energy projects, but then it's translating into the average, like every daily cost that we see here. It's appalling, to be honest, but then again, we need to break it down to see why all of these things. But these are the realities that you should be aware about. So far, the responses that we've seen are like the African Credit Rating Agency that's launched in June 2026, the continent's first attempt to provide an alternative sovereign credit assessment framework. So they just created a committee, or rather an agency for credit rating within Africa, which is good. Let's see if we can actually adjust some, like actually have like ratings that are reflective of what like the economy is actually saying. The Africa-France Nairobi Summit called for financial architecture reform. By 2030, $28 billion of concessional capital will be necessary to mobilize the required $90 billion in private clean energy investment in Africa. That is the IEA's analysis. Nearly 600 million people across Africa still lack access to electricity.
Yes,
that's a fact.
Very.
And the financing structure is one of the largest structural reasons why. Yeah. I think energy is one of the main sectors that we actually addressed on this show a lot since the beginning of Across Markets. So you can always go back to see that there's a trend, and we've been following a lot of the stories in the energy sector. So the closing argument is this, right? Nigeria licensed 37 oil blocks today to close, this week, right? To close its production gap. The CBN held rates to protect price stability. So both are defensible decisions for today's economy, of course. But the cost of capital story is about 2030 and beyond. And it is the single most important structural constraint on whether Africa's clean energy transitions happen at all, or whether it remains a conference room aspiration funded by pledges that never reach a rooftop. We will be looking out for that. Anyway, we have come to the end of the show, but before we go, we always give you what to watch out for, right? While every story here has definitely something you should watch out for, if you go back, you see that we did talk about it. One of the major things within a sector that we're looking at, which is the fintech finance sector, we have the Nigeria Fintech Forum coming up. I'm personally anticipating it, and I look forward to attending because a lot of we're going to be there are going to be conversations that are going to be addressing the major all of the bottlenecks and the different parts of fintech that make finance, accessible, financial inclusion, everything with payments, credit, data facilities and the likes, So I'm actually personally looking forward to that, and maybe from attending, I'll definitely come and give my view on everything that happened there. So all right, closing today's show. 3 decisions shaped Nigeria's economic week. The CBN chose caution, the NUPRC chose competition, and the global financial system, largely by inertia, chose to make Africa's clean energy ambitions 3 times more expensive than they need to be. That last one is one of the decisions nobody voted for, and it may cost the most. All right. So that's all on Across Market this week. Please do not forget to like, share, and subscribe, and leave a comment if you found all of this insightful on today's episode. And do not also forget to follow us on all our social media platforms. That is, This is Business 360 on Instagram, TikTok, LinkedIn, and Facebook. And now, again, I remain Joy Abia, and I have my lovely co-host with me.
Very Fechuku.
Thank you so much for joining us. See you next week.
Bye.